Hey guys, welcome to another video. So today we are going to discuss about the financial models, how Zara and Zudio make their financial model and how these companies raise the fund and how they manage these complex business models like for the apparels and other garments and how to make it profitable for the best funding requirements. So today we are going to discuss about like the financial model technique. This is a very crucial for the investment banking, and apart from that, like how to make the perfect investment banking summary. So we are going to discuss in this video. So let me this is the summary tab for the financial model. It's you can say that it's index tab for that, and these are the number of the tabs in that. Like first one is the income statement, that is the historical and the forecasted income statement. Then we have the balance sheet, like the historical and forecasted balance sheet. Then we have the cash flow statement, it's a historical and forecasted cash flow statement. Then we have the ratio analysis, like ratio analysis of the company, historical and the forecasted one. And this is a revenue build up, like geographical segment and segment wise revenue breakup. Then we have the cost sheet, like operating cost breakup, historical and the forecasted. Then we have the working capital management, it's analysis of the working capital of the company, historical or forecasted, whatever is there. Then we have the depreciation schedule, like the fixed asset historical details of the forecast. Then we have the amortization schedule, it's intangible asset historical details in the forecast. Then we have the shareholders equity and the equity schedule, it's a detail of equity issues and buyback of the equity. Then we have the debt schedules, like details of the debt raised and the repayment of the debt, like whatever is there we can discuss here. So next we are going to discuss about the income statement. So here in the income statement, this is the total revenue. It's a revenue of the particular company. This is going to be here, and we have the cost of sales. It's a certain buying and occupancy and warehousing expense. So this is related to the cost of sales and direct expenses. Then we have the direct expenses. So there's a formula here, like revenue minus cost of sales is a come to the gross profit. So this one is the gross profit from that. Then we have the indirect expenses, it's a selling and administration expense. So these are the expenses here. Apart from that, there's a loss on the impairment asset, so this is another asset, like we can say that this is a loss for the impairment of the any asset of the company. Then we have the EBITDA. Let's say if we click them, then there's a formula regarding the EBITDA. So this is a gross profit and the indirect expenses. Then it's a loss on the impairment asset, so this is called the EBITDA. Then we have the depreciation and amortization expense. So these are the actual one, and the another one is linked to the schedule. So this one is that. Then this is the amortization schedule. It's related to the numbers of the company. Then we have the EBIT. It's something like that. It says interest expenses 1. Then we have the other income, so this is 1. So and these are related to the debt schedule. So debt schedule of the company here, and these are the other incomes of the company, so here. Then we have the realized loss of the sales of the investment and securities, so this is 1. And this is the loss less on the earnings, so this is 1. Then we have the profit before the exceptional items. It's a provision for income tax. This one is there, like provision for the income tax. If the particular income tax is there, let's say we can say that this is linked to the particular company, profit before the exceptional items. Then we have the tax rate, and multiply this, so this is the provision for the income tax. Then we have the income from the continuing operations, so this one is there. Let's say we click on this, and this is the profit before the exceptional items and the provision for income tax. So these are the income from the continuing operations. So this one is there. Then we go into the balance sheet, like how to make the balance sheet and how these are linking to them. So in the next video I'm going to discuss about that. Let's meet in the next video, and subscribe the channel for the more updates.